everything almost is tied to income levels. So one person could be following a certain rule set because their income allows them to follow that rule set. And another person who has more income is really following almost a completely different rule set because that's how a lot of the tax code is structured now. If your income crosses a certain threshold, you can lose out on deductions or other tax benefits, and your return really changes in a lot of ways. So it makes it more difficult to understand as just a consumer. Am I getting a tax benefit for this? Or it's no longer a simple question. And the true answer needs to be very specific to that person and their situation. It's unfortunate because it really does make it difficult for just a common person to understand where they're at tax-wise. Just one final thought on that. The SALT limit, that 10,000 just changed this year, again, for some people. So
Right.
the new rule effective this year is you get 40,000 maximum on your state and local tax deduction, which again, in and of itself is already over the $30,000 standard deduction, right? But that's not for everybody. If your income is too high, 50,000 for a single person, 500 for a married couple, you begin to lose some of that SALT deduction, and it eventually goes right back to 10,000. So some people will have a $40,000 state and local tax deduction. Some people will have 10,000, and some people will be somewhere in the middle. So again, how do you figure it out? Right?
No,
As
and you
just a
can't.
regular person, what is my write-off?
The other